Hey, Steve Saretsky here. As always, the Canadian real estate market update with a particular focus on Vancouver. If you get any sort of value or entertainment out of these videos, all I ask that you hit thumbs up and subscribe. I appreciate the support. As always, if you have any questions or comments, put those below and we'll banter back and forth. Doing just a quick overview of sort of the Canadian real estate market. We'll talk on BC real estate sales data. Quick overview on sort of Vancouver. It's going to be all-encompassing and basically provide an overall thesis or overview of what's happening not only in the real estate markets but in the Canadian economy. So it'll be a little bit more jam-packed today. Before we get into it, I wanted to quickly make an announcement. I've recently become a real estate contributor for BC Business Magazine. So go out and support these guys. This is the June edition here. And they put out about 10 editions a year or whatever, so you can go grab those on the newsstands. Let's get into the data. Basically, if you've been looking at the Canadian real estate market over really in 2018, we've noticed a national slowdown with sales declining, average prices coming off. That's been the same trend in May. May sales came in 16% lower this year than it did in May of 2017. So it was a 16% decline. It was the second largest national decline since May of 2008. Of course, we know that was the year of the financial crisis. With that, you had inventory picking up. So you had sales down 16%, inventory increasing by 4%, and the average sales price showing a decline of 6%. I believe the MLS HPI sort of benchmark showed a 13-month deceleration, a 13-month continuous deceleration, I believe it showed on a year-over-year basis that the MLS benchmark might have still been up. I'm not too sure. I have to double check on that. But again, you can sort of draw your own conclusions. It's usually somewhere in between. As I mentioned, average prices aren't always the best gauge of what's happening to prices, but you're always sort of looking at those bigger trends to get sort of a bigger picture idea. And I look at it and I see falling sales with rising inventory and declining average sales prices combined with lower dollar volumes, basically money spent into Canadian real estate, generally does not bode well. National housing recessions affect everybody, particularly consumer spending, businesses, etc., and they are almost always recessionary. So if you pull that back, you sort of look into BC real estate, which has been really Canada's most resilient housing market and arguably one of the more frothy housing markets, that in Ontario. If you look at BC, BC real estate sales in May declined by 29% on a year-over-year basis. Yeah, a huge part of that had to do with Vancouver, but this is sort of becoming more widespread into the valley, into the interior, etc. So a 29% decline in BC real estate sales for the month of May. That was the largest decline since May of 2008, when you had sales decline by 31%. And so I look at that and I say, okay, well, May of 2008, the global economy and the financial systems look like they're all going to collapse. Central banks had to inject trillions and trillions of dollars to keep this thing, bail out the banks, etc. So the fact that sales declined by 31%, you could argue was probably justified. I look at it today, and you have BC real estate sales dropping virtually the same amount, 29%, at a time when you have peak employment or peak unemployment. The rate has fallen, I believe, to 5.6% as of April 2018. In Metro Vancouver, that unemployment rate fell down to 3.9%, which has driven wage inflation up to roughly 7%. So these sales declines are coming at a time when the economy, at least in BC, is just firing on all cylinders. But with that recent slowdown in sales, some of the data is starting to work itself out. We saw a 0.5% decline in employment growth, in employment rather. So, we'll have to wait and see how that all shapes up. But, again, I'm looking at it and saying, well, what happens if employment starts to tick up? What happens to sales then? because certainly when you have housing sales fall off by that much and you have an economy where the GDP is roughly 25%, GDP growth is roughly 25% derived from a housing sector, that's going to be very, very important moving forward. And so if we look at sort of what's been happening, you have inventory now increasing in BC for the first time since May of 2012, which was another soft year. So you have sales going one way and you have inventory going the other. And that is starting to, you can start to see that play out in the average sales price. Again, the average is not perfect, but if you look at the average sales price as well as the seasonally adjusted average sales price, what you'll see is that basically BC real estate sales prices peaked in 2016. They declined following a foreign buyers tax, and they basically retested those highs in the spring of 2017 before ultimately over the last year they've basically gone nowhere. They're flat. So the price growth has been virtually non-existent. And you have sales declining and inventory rising. So that's going to put some pressure on the market. Now, I think one of the things that, I was talking to someone about earlier this week, that one of the things that you're always looking for, and again, nobody knows the market. I don't know the market in terms of like what's going to happen in the future, but I do know what's happening right here, right now, and I can certainly provide sort of a thesis moving forward. But again, that's how that all plays out is anyone's guess, right? I mean, the ultimate end goal is just to provide the analysis of what's happening right now. I mean, some of the articles this week, Zero Hedge picked up my one on Canadian real estate. Wolf Richter of wolfstreet.com picked up the BC article that I wrote. I had Larry, I believe it's Larry McDonald of the Bear Traps report. Runs a hedge fund there. He picked up the some of the charts I produced for Canadian real estate. So when you produce this sort of information, nobody's going to pick it up if you're full of crap. So it's always just about really providing what's happening in the market. And I do get some people in the industry saying, oh, how can you say that? Why can you say that? Because I'm looking at it from a longer term perspective of really just educating people what's happening in the markets. And so when you look at that, I'm looking at the bigger picture in terms of what does that all mean. So you're starting to see some of this data now reflect and pull into the consumer spending. So you're seeing on a 3-month and 6-month annualized pace, home furnishings and construction materials, home building materials and finishings, home finishings like couches, furnitures, etc. Those have all, that pace of growth has turned negative on a 3-month and 6-month annualized pace. So you can see that the consumers are starting to pull back. And I mentioned last week in the video how much real estate and household consumption is dependent on real estate, right? Houses stop moving, prices start stagnating. All of a sudden people aren't going for as many dinners. Starting to see that reflected in Canadian auto sales as well. This is all, and that's the stuff that really fascinates me, how all this is really interconnected. So it's going to be massively important, moving forward. And, with that being said, one of the things that you're always looking for, sort of, if you've read Manias, Panics, and Crashes by Charles Kindleberger, is all of these changes have been happening, and you're always looking for that government intervention because they almost always go too far, and they almost always come in at the wrong time. This has happened in every boom and bust cycle, that governments come in at the very peak of pain point when everybody is just up in arms and there's just that, everybody's just feeling that pain, and the government is just basically forced to come in, is almost always at the peak. They almost always come in way too late. And so you're seeing this where BC real estate sales have declined by 29% on a year-over-year basis, and the BC government is coming in. The speculation tax is only going to go into effect in the fall, and then they're going to throw in a school tax on top of that. And you could argue the same thing with the mortgage stress test. That thing should have been implemented back in 2015 when you had massive amounts of Chinese capital outflows pouring into the market, and locals trying to, you know, keep up with that amount of capital with ultra low mortgage rates. That stress test should have been in a long time ago. So these guys would come in way too late, and the government's still throwing things on in the midst of, you know, I think a blatantly, obviously correcting market. But that's always what you're looking for. And again, I don't know the outcome of this, but I can certainly see what's happening today. All you have to do is go back and look at history and study that, and you can see that this pattern almost always plays out. Yeah, I mean, some sort of anecdotes that I'm watching moving forward. I think that the private lending space still very much intrigues me. I think that every single mortgage broker that I have spoken with and I have very strong connections and ties with, their private lending business is absolutely exploding. It is taking off. I mean, that's very late cycle dynamics, right? Where people are getting into pinches, they can't get regular financing from the banks, and so they're going and taking on, and these guys are giving out, you know, 1-year bullet loans at 10-12% on a second mortgage. So basically, you know, the concern there is, if you're getting, a lot of the times, again, this is not every case, but a lot of the times if you're going in for a second mortgage, that's because you're in some sort of financial difficulty or some sort of emergency. It might just be temporary, but the ability to get out of that loan means you have to repay it at the end of that 1-year term. And so it becomes much more difficult to do if your house actually declines in value over that 1-year span. So that loan is basically not able to roll over. And so what happens then is if the private lender that's registered in the second title doesn't want to roll that loan, he says, "Nah, I don't want to give you another 1 year. I want my money back." Well, how is that guy going to pay him back? How is that borrower going to pay him back? So they basically have to start a foreclosure process. And of course, that can sort of start a domino if those loans are not able to be rolled over. Another space that I'm looking at is the pre-sale condo space. I've talked about this, but you are at a point in time where sales are declining in DC. 29%. Inventory is increasing. It's the first time it's done that since May of 2012. And then you have 55,000 record high number of units under construction in BC. That is all under construction coming down the pipe at a time when demand is starting to crater and inventory is increasing. So that's just going to add to, in my opinion, is going to be downwards pressure. So, and again, these changes are all coming at a time when we have really, I would say, peak prosperity, record low unemployment rates, very low interest rates. Every restaurant you go to is still jam-packed, busy. Everyone's still got money kicking around. But what happens if that unemployment rate starts to tick up? So, you can imagine what that might do to, say, a luxury market such as West Vancouver, where detached prices are down about 20%. And you look at, again, scale that back into the pre-sale condo market, where the record number of units still coming under construction, and you're seeing all these developers now offering incentives to realtors, decorating bonuses. I had one come across my desk last week out in the valley. It was a townhouse project, and they were offering to match the buyer's 5% deposit. So how that works is, as soon as you sign on the dotted line for your townhouse, you have to put down a 5% deposit to sort of secure it. And the developer's saying, well, we'll match that 5%. So now you're basically at 10% down. And the developer also asked that in 6 months or so, they want another 5%. So you're really going to be in, so it's going to be 15% of deposits, but it's really only 10% if you think about it, because the developer's already matched that 5%. So, the developer matching a 5% down payment, that's equivalent of a 5% price cut. So you'll be watching for those things moving forward. But I mean, again, so hypothetically, this is all hypothetical. Nobody knows where prices are going, but if that buyer is in at 5%, and then he puts down another deposit, he's at 10%. Well, if that townhouse takes a year and a half to build, and let's say in a year's time prices are down 10%, well, now he's basically in it for zero equity. So does he choose to walk away? All these scenarios can start to play out, right? So again, don't know what's going to happen. All you can do is sort of watch the data, what's happening. But I think it's very obvious with BC sales, Canadian real estate sales declining on a national level, inventory picking up. We'll have to see if we get another rate hike here on July the 11th from Stephen Pelosi at the Bank of Canada. But that, the rate hike odds recently, because of all this weak Canadian data coming out, rate hike odds are sitting at just over 50% now. The US dollar has been surging. That's not good for the Canadian dollar, so there's going to be more downwards pressure on the loonie. It's a very interesting time, I think, for the Canadian economy as a whole, not just real estate. So, again, keep an eye on that. But as always, questions, comments, put those below. Otherwise, I'll see you next week.